Hi guys, welcome back to the channel. Um, Today I'm going to be going over what transpired on the markets last week as it relates to the analysis that was posted. Uh, Before we begin, let's just pray. God, we just thank you again for your blessings and for your goodness and for this opportunity. We ask that you will just be with us as we review what happened on the market last week. With anyone watching this video, may they be successful and may we all succeed together. We pray. All right, guys. This morning I'm going to be doing things a little bit different. I'm actually out for coffee this morning, so I may be, um, you know, you may hear some background noises, but that's okay. Decided to come out and have some coffee this morning. Um, anyway, last week, as you know, my analysis, um, I've always posted and I've always said my bias is 100% bullish, which means that I buy from my largest higher low and I exit on my higher highs. Last week, you would have noticed that I entered one trade, which I held over the weekend, and it basically continued all the way until Friday. Now, of course, as you would have seen in my post, those of you who follow me on Instagram, and my Instagram account is Arbor Strategy or Chris Arbor. So it's Kris Arbor. Two different Instagram accounts. So just so you know, I did exit from my trade last week, and the move actually continued. But like I mentioned to you, I do not chase the moves. I wait for my right setup before actually entering the trade. So my next trade last week was actually taken on Friday. And of course, I'm still holding over the weekend. Just hang on one second. I'm just going to pick up my pastry that I ordered. Hold on 1 second. All right, guys. Sorry about that. All right. Now, if you notice on the 2 hour actually made the low of the week. On This was on Tuesday. Okay. Now, this low, which is a breaking structure, uh, it broke the structure, this previous higher low, to form this new low. Now, the thing that gets a lot of traders confused, and I've seen it time and time again, is that when you keep focusing on your smaller time frame, you react to everything that the market does. And that being said, this temporary breaking structure confused a lot of people into thinking that the market was going to continue going down. Okay. Now, please note that this low, this new low, registered, I believe, on the 3 hour. Yes, it's a new low on the 3 hour. It registered on the 4 hour as a higher low. So what that says was that the 1, the 2, and the 3 hour showed a temporary breaking structure. And if you were focusing on only those time frames, you would have thought that the market would have continued going down and that it was a breaking structure on the larger time frame. And that's not correct. When you look at your 4 hour, you'll see that that move was only another higher low. Now, remember, I've always said to you that any sell that the market makes, it's only going to be a temporary sell, a temporary retracement in order to fulfill the larger higher low on a bigger time frame. So here we see it. The 4 hours at a higher low. You go all the way up until your 23 hour. Your 23 hour actually only made a higher low also. Okay, your daily time frame was already at a higher low from the previous week. So this was only a retest of that higher low. And so the market continued to go up. And you see right here, we ended on Friday on a lower high. All right. So that's just to clear up exactly what happened last week and why I still held my bias as 100% bullish. Okay. So going back to the 2 hour, you'll notice that after the market actually came here and made this breaking structure, which ended on Tuesday, you'll notice what it did. It went right up for the remaining portion of the week and made a new high. Now, this is now a breaking structure. This is a true breaking structure towards the upside. And so we expect to see the market continuing to make higher lows, higher highs. All right. Now, remember, I've always said Mondays, Tuesdays, and sometimes Wednesdays are consolidation and retracement days in order to flip a major move for the remaining portion of the day. And so we saw exactly that. Monday, market actually did a whole bunch of consolidation. And then Tuesday, it actually had a significant drop, but it only created that higher low that we needed in order to go in for another swing trade towards the upside. All right. So I hope that's clear. Now, if you go onto your 1 hour, you'll see that played out a lot more. There are a lot of opportunities last week for different trades. Here was your first buy. This higher low right here would only have translated to a higher low, of course, you know, the 4 hours and everything like that, the 4 hour time frames. It actually continued from here, it went up and made a lower high. Now, remember, I've always mentioned to you guys that once the market goes and it makes a higher low, okay, if you enter the trade from that higher low and the market goes up and makes a lower high, that signals to you that the market is still in a consolidation mode. And so it's easy for you to take your profit on your lower high and then you wait for an higher low on your larger time frame. And that's exactly what played out last week. All right. Now you notice on the 1 hour, here's your first opportunity. Lower low on Monday, you exited at market close. That would have been a nice, I think 1,500 pips. So if we measure this from right here all the way up to where it ended, it's about 1,300. Yeah, 1,200, 1,300 pips. Just call it 1,000 pips. Okay, take your profit right there. Wait for it to drop. So, like I've always said, I mean, you guys have always known me to say this. I don't take the sells. When the market sells, I've already taken my profit at the lower high. And so what happens is that at this point, I'm now waiting for that retracement. Once I get that retracement, okay, then it's time for me to actually do another buy. So you'll notice that instead of taking, you know, you may say, well, you'd have given up about 4,000 pips here. Okay, 4,000 pips. That's fine. That would be a very nice sell. However, since I am waiting on my buys and since my my bias is 100% bullish, instead of taking this sell, I am now waiting for the market to finish its retracement and then I buy again. So that 4,000 pip move that was made just on Tuesday, guess what? I would have recovered that buy. I would have recovered that with a 5,000 pip buy on the reverse side. So between Tuesday in London session on Tuesday, all the way up to London session on Wednesday, I'd have recovered over those 4,000 pips that I would have probably gained from the sell. And you may say, okay, fine. Well, why not take you know, both the sell and the buy? Well, here's the problem with taking sells. And you know, I can tell you without apology, every single person who has tried to sell the NASDAQ 100 continuously on a long-term basis has gotten trapped at some point in time. Okay? Whenever you try to sell a bullish instrument, there is going to be some times when you're going to get trapped. And the reason why you get trapped is because your emotions kicking and you see this big move of 4,000, it's going to be hard for you to actually say, okay, fine, I'm going to exit at this point and wait for another buy, because in your mind you're thinking that, okay, this market is going to continue going down. And that's exactly what happened to a number of people. Came here, it made this lower low. And then you had another drop, which only came, it didn't even break the lower low. It came and settled right at the same point. Um, a few ticks off right at that same point. And so you are now thinking that the market is going to continue going down. And look at what happened. It shot right up. And it kept going that way for another 24 hours. And then from there, because it broke that structure again towards the upside, okay, here's what happens. You now get a higher low, then you get a higher high, you get another higher low, then you get a higher high. And so the trend has confirmed that the market is continuously bullish and it's going to remain that way forever. All right. So, like I've always said, I will challenge anybody, any institution out there, right, to refute what it is that I'm showing you right now. Because this is 100% facts. Okay. Look at last week. Here you had a temporary breaking structure on the 1 hour. So you had a higher high to a low. Okay, that's a breaking structure. Then you had a lower low, lower high to a lower low. That's confirmation. Then you had another lower high to another lower low. Okay. So of course, here it is. You're thinking, yes, the market is now bearish. No, it's not. This lower low, as I pointed out to you right here, was only a higher low that was created on the 4 hour, which is right here. And from here, this higher low went up. It broke this previous lower low to form a higher low before you had the retracement. All right. So that's basically what happened last week in a nutshell. For those of you who are confused, and I see the comments all the time, oh, market is not doing what it's supposed to do. No, the market is doing what it's supposed to do. You are just going against what the market is actually doing because you're trying to sell a market that is 100% bullish. It's only going to be temporary. Any sales that you get into are only going to be temporary. And until you understand that and realize that you will be forever going against the market. All right. So this was last week. Like I said, this was Sunday. That's the Sunday boundary. This is Monday, which was a short trading day because of the Labor Day holiday here in the United States. The market closed at 1, reopened at 6. So you have Monday, Tuesday, Wednesday, Thursday, and then Friday. Look at the pattern. Here we go. This is where we started on Monday. This is where we were on Tuesday. This is where the market found the bottom last week. Here, the market has been buying 100%. So here's a quick thing that you can do. This is Monday. This is the highest point it went on Monday. Okay, if you measure from your highest point to your lowest point that it made last week, you are now at about 5,400 pips. Okay, now do the reverse. Measure from your lowest point all the way up to your highest point where it went on Friday. And you'll see that you are now 8,800 pips. Okay, even if you came to the low that was created on Friday, you're still 4,900 pips up from where you are. So like I said, it's obvious that the buys are what is carrying the trend, and that's what you should be trading. So thank you again, guys, for watching. This was the review for last week. The next video that I'm going to be posting this morning is going to be the analysis for the upcoming week, which begins today, and then it runs until the 12th, which is Friday. So take care, guys. Thank you again for watching. Thank you again, God, for your blessings and for your goodness. Please bless us as we continue to trade. Thank you and we love you. All right, guys. See you next time.